What's up, everybody? So today we are going to talk on my secret model, which I want to reveal to my audience because I have been getting good attention of people because they've been watching and they're interested in watching my videos because I want to share people my knowledge. Whatever I have, I do not want to die mean, right? So that is why I've been sharing a lot of things to people. Now I shared the Asian session model, which is high accuracy, and people have been taking benefit off of it, and they've been trading it correctly, right? So this is going to be also a secret model, and we'll be going through this, and I'll be showing you a step-by-step guide. So now, essential to comprehensive understanding of operational protocols, we must be mindful of dealing range to understand both buy side and sell side momentum effectively. Now the dealing range is actually the scale to measure the moves, right? We measure the swing highs, from swing highs to swing lows, to measure the equilibrium, right? So this is what we call dealing range. I will be showing you the examples at the end, right? Now it's essential to have in depth knowledge of key trading sessions, especially the London kill zones and Asian kill zone. We will be adding these two sessions in that trading method, right? And another thing is, I just want to suggest you to not to go to watch my all strategies and just apply everything, right? So that's how I am trading. I do not apply all these strategies, but I know a lot of things. I have watched every ICT's video. I can easily say I've watched 500 plus videos of ICT, long short videos, because I got my things in my mind. I was to get knowledge, but I fixed only one strategy in my mind to watch, right? You do not need a lot of strategies, only one single model, right? That's why I've been creating a lot of things for people to actually understand it and take only one strategy, not everything, right? So now, key insight to the secret model: will measure the Asian session high and low within the dealing range to determine 50% premium and discount levels, guiding our actions accordingly. Now we'll be waiting for the change in the structure, CISD, our market structure shift, which is MSS, to confirm a trend change, then place or buy our sell positions in alignment with the new trend direction. Now, in the dealing range, if we're above 50%, we will be looking for any PD array. That can be auto block, that can be inversion favorable gap, that can be break block, or that can be anything, right? Any PD array, right? So our aim is to target session highs and lows, but traders should be mindful of securing a 1 to 2 reward risk to reward ratio or higher. We should be keeping this in our mind. We will not be going off 1 to 1. We only would be thinking of 1 to 2, right? So let's break this down with some visual examples. Now this is how dealing range looks like. We have the low, which is Asian low. Now Asian session starts from 8 p.m. to 12 a.m. East EST, which is Eastern time, right? A lot of guys are asking me questions that what time do I tell people? So this is what it is. It's the Eastern time window, which is New York time, right? If you go to trading view, you can be changing it, right? So 8 p.m. to 12 a.m. Now we have the Asian high, the low. We have to measure it, right? The premium and discount. I have just colored it wrong, but you can be just thinking like, right, we should be having this 50% in our mind. So this is the discount level, this is the premium level. Now when market is below premium, we'll be thinking of buy positions, right? And we'll be looking for this time period to take trades. Should be starting off of 2 a.m. to 5 a.m. nothing else, right? You should not be thinking in other time window to capture these moves. Only 2 a.m. to 5 a.m. Eastern time window, right? So let me show you the bearish example. So we got this 8 p.m. to 12 a.m. Asian session. We have this premium and discount. We have to measure this low to high, which is Asian high and low, and we'll be looking for price to go above 50% and change the structure, and we'll be looking for the price moves right there to catch for our sales, and we're looking for the Asian low or high to target as our TPs, right? So let's go and get in the charts, I'll be showing you the live examples. Yes, so this is the example number 1. Now we want to mark out the 8 p.m. right? So simply you need to change the time into New York time, right? So this is the New York time. Now we want to mark out the 8 p.m. to 12 a.m., which is the Asian session, right? We want to see price to come above in premium areas or in discounted areas when we are looking for buys or the sales, right? So simply this is the Asian high right there. Let's mark it out, Asian high, and then this is our Asian low, or either we can be just marking out this high, this low, right? Let's just mark it out. And now we want to measure this move, which is from Asian high to Asian low, and we'll be looking up at the equilibrium of the price, right? So let's just mark it out. And now we want to see the PD areas which are above 50% level, right? So there you can see the fair value gap right there, which is above 50%, and this mitigation block, order block, you can say, right? This order block, these two PD areas are above 50%, and we want to go to 1 minute chart to see the structure shifts in the markets, and then we'll be act accordingly. So let's get into the 1 minute chart. So this is the 1 minute chart, and now let's see what is going to happen. So we have this 15-minute fair value gap right there, FVG. So let's see. We somehow the accumulation, and we want to see the manipulation upside, right, for going higher, for going lower. So now you can see we have hit the CE level of this fair value gap, and now we want to see the market structure shifts. Why? Because we have the time window of 2 a.m., which is the London opening, to 5 a.m., right? So let's see what is going to happen. This 2 a.m. and 5 a.m. Let's just mark it out. We are not supposed to buy or sell without this time window, right, in London session. So let's see what is going to happen. We want to see the structure shifts in the markets. Let's go. So now you can see we have this high and this swing low acting from this fair value gap. Let's see if we get this low break out with displacement, right? Displacement is equal to fair value gaps. Let's see. So now, yeah, you can see the low has been broke with displacement, and we have closed below this low. It means we have now the change in the structure delivery or market structure shift, right? So we can be entering from this fair value gap or either from this fair value gap, right? So sometimes if we have the fair value gap and then again the fair value gap, sometimes these fair value gap are unfilled. So that's why if we are not going to miss the entry, then we can be entering off of this fair value gap, right? So let's see. So with this fair value gap, we'll be just entering off of this, and we'll be putting the stop loss above this fair value gap, right? And then we'll be going for 1 to 2, or either you can be just in long positions, right? So I will be targeting this Asian low. Let's see what is going to happen. We have just hit it, and now this is running. Okay, again the fair value gap, and let's see. You can be just taking the partials at these lows if they are in, right? So this low, which is a sell side liquidity, right? So let's see what is going to happen. And then we just have hit these Asian low, right? So this was the example. Let me show you another example. So this is another example So let's mark out the 8 p.m. right there. Okay, and then 12 a.m. right. So this is the 8 p.m. starting and 12 a.m. right. So we want to mark out we want to measure this with dealing range, right? So the high to low, and this is the 50% of the dealing range. We want to see move below it and then go above to take out these highs, right? So let's see what is going to happen. So we have moved below it, right? And we want to go to 1 minute time frame to see the market structure shift, and then we'll be acting accordingly, right? So now we have these highs, which is the swing high, right? We want to see the kilos above it, and we want to see any fair value gap to be entering off of, right? So let's see. So we have kilos above it, and we have this fair value gap which is in discount, right? With the shift in the market structure, we have this fair value gap. We want to entering off of this fair value gap, and we will be putting the stop loss below this low, and we want to target these highs as a 1 to 2 target, right? So this is the buy side liquidity, right? So let's see what is going to happen if our limit has been executed, or either we are missing this trade. We do not force it, okay, if it has been missing. So you can see we have just hit our limit. Let's see what is going to happen. We have just going above and above, and then you can see we've hit the target. So price must be traded in 2 a.m. to 5 a.m. right, which is London session. We are not going into another things. This is the rule. So this was the example number 2.